Good day, Junior Techies. I'm Mrs. Brimacco. We're going to look now at Chapter 10, and this chapter will focus on closing transfers. But not only are we going to do closing transfers, we are also going to do adjustments so that you can see how this fits in together. So if we look at what we've done to date and we look at the accounting cycle, we have done the adjustments, which happens at the end of the accounting period. Now, the next step, after we've done adjustments, we need to close off our nominal account section. And why do we close this off? Because we want to calculate what was the net profit. So for us to calculate the net profit, all our income and all our expenses is closed off to the final accounts. And from there, we complete the post-closing trial balance. So if I'm looking at my final accounts, the final accounts consist out of the trading account, in which we calculate the gross profit, and the profit and loss account, in which we calculate the net profit or loss for this accounting period. So in our ledger accounts, we would always have in our trading account our sales minus debtors allowances equals our net sales minus cost of sales equals my gross profit. That is taken to the profit and loss account plus income minus expenses equals my net profit. And once we've done the closing transfers from the general journal, completing it in the general ledger, we complete the post-closing trial balance. So take note, what is the difference between the post-adjustment trial balance and the post-closing trial balance? My post-adjustment trial balance consists out of the balance sheet account section and the nominal account section. But if I'm looking at my post-closing trial balance, there is no nominal account section. There's no drawings because that would have been closed off to the capital account. So this is just a summary of what is happening in closing transfers. We are now going to look at Activity 1. Activity 1. You are provided with the information related to JT suppliers. Their financial year ends 28 February 2023. Required, show the journal entries for the closing transfers, prepare the general ledger accounts in your answer sheet, prepare the final accounts on 28 February 2023 by completing the trading account and the profit and loss account. And then lastly, prepare the post-closing trial balance on 28 February 2023. Show all calculations in brackets. And when we're looking now at this activity, I'm going to focus on the steps on how to do the closing transfers. So we are provided with the post-adjustment trial balance on 28 February 2023. This means after adjustments have been done. It consists out of the balance sheet account section and the nominal account section. Then they provided you with additional information. The owner transferred a private second-hand vehicle at a value of $54,000 into the business on 1 February 2023. This has been properly recorded. So where do we start? The first thing, which is very important to understand, we need to close off all our income and all our expenses. You should know by now that all my income and expenses will appear in the nominal account section. So when we're doing closing transfers, we are focusing on everything in the nominal account section. Step number 1, we need to close off debtors allowances to the sales account. So to close off debtors allowances to sales, it means that we're going to open up debtors allowance, which is an expense. That means the total brought forward will appear on the debit side. Sales is regarded as an income So the total brought forward on the credit side. So when we're saying that we're closing off debtors allowance, it means that there will be no balances or totals left over in that account. Whatever is on the debit side, and again, a reminder, this is now after we've done adjustments. Whatever is on the debit side is now taken to the sales account, which means that debtors allowances is going to be credited, account debited, sales. So that is my step number 1. Step number 2, close off sales to the trading account. So if we're closing off sales to the trading account, it means that sales is going to be debited, account credited, the trading account. So reminder, we started with the total brought forward. Debtors allowance is closed off to sales. Once we've done that, then sales, my new total, is taken to the trading account. Step number 3, close off cost of sales to the trading account. So if I'm looking at cost of sales is regarded as an expense, which means the total brought forward is on the debit side. To close this off to the trading account, we are going to credit cost of sales so that the trading account can be debited. Once we have closed off cost of sales, we can now do step number 4, and step number 4 is to calculate the gross profit. To calculate the gross profit, we need to take the credit side minus the debit side equals my gross profit. Take note, I've written it in a different color. That will not be your details. Step number 5, we need to take the gross profit to the profit and loss account. So to take the gross profit to the profit and loss account, it means that my trading account is going to be debited, account credited, profit and loss account. Double entry principle, for every debit, there is a credit. Step number 6, we need to close off all our income to the profit and loss account. This means from the nominal account section, all our income, which I've highlighted, must be taken to the profit and loss account. So we start with commission income. It's an income, so the total brought forward is on the credit side. Discount received, interest on fixed deposit, rent income, bad debts recovered, and trading stock surplus. All of this is regarded as an income, which means the total brought forward is on the credit side. We need to take this now to the profit and loss account. What have we already completed in the profit and loss account? We have calculated the gross profit, where? In the trading account. So to close off all our income, it means that your income will be debited, so commission income is debited, account credited, profit and loss account. Discount received is going to be debited, account credited, the profit and loss account. Interest on the fixed deposit is debited, account credited, profit and loss account. Rent income is debited, profit and loss account credited. Bad debts recovered, debited, account credited, profit and loss account. Trading stock surplus, debited, account credited, profit and loss account. So you can basically study this. All income accounts will be debited, which means account credited, the profit and loss account. Step number 7, close off all expenses to the debit side of the profit and loss account. So we now need to take all the expenses. Remember, we've already done cost of sales and debtors allowances. It forms part of the trading activity. So everything else which was basically left over now, the bad debts, insurance, packing material, rent expense, stationery, salaries and wages, depreciation, all of those are regarded as an expense, which means the totals brought forward appears on the debit side. And this must be closed off to the profit and loss account. In my profit and loss account, we have already done all our income. So to close off the expense accounts, it means that bad debts will be credited, account debited, profit and loss account. Insurance is credited, account debited, profit and loss account. Packing material is credited, account debited, profit and loss account. Rent expense is credited, account debited, profit and loss account. Stationery is credited, account debited, profit and loss account. Salaries and wages is credited, account debited, profit and loss account. Depreciation is credited, account debited, the profit and loss account. So this is why you can study. To close off expenses, your expense account will always be credited and the profit and loss account is going to be debited. So take note, gross profit plus income minus expenses, which means our next step, step number 8, we can now calculate, did we make a net profit or did we make a loss? So to find out what was our net profit or loss, we need to balance this account, which means we're going to start adding up the credit side. It's clear that the credit side is more than the debit side, which means that the balancing figure, which will be the net profit now, will appear here on the debit side. Step number 9, the business made a profit. So if the business made a profit or if the business made a loss, irrelevant, the net profit or loss is taken to the capital account. This is why we say all income, all expenses affects the owner's equity. Capital is regarded as an owner's equity account. In this case, the business made a profit. So if we're looking at the capital account, as mentioned earlier, it's an owner's equity account, which means that the balance brought down will always appear or will appear on the credit side. But take note, I haven't written down the balance. There was additional information which said that the owner has given a second-hand vehicle to the business that will form part of his capital contribution. Now this has been recorded, which means that if the owner contributed a vehicle, 54,000, and it has been recorded, we need to calculate the balance in the beginning by taking the balance from the post-adjustment trial balance, and we're going to subtract 54,000. Now I can take the net profit to the capital account, which means the profit and loss account is going to be debited, account credited, capital. Our final step, once we've done that, we need to close off drawings. and drawings is taken to the capital account. We start with drawings, which is an owner's equity account. On the debit side, we have a balance brought down. This is taken to the capital account, which means drawings will now be credited, account debited, capital. And once we've done that, we can calculate our new balance. Take the credit side minus the debit side. Now, all of this happens where it first starts in the general journal. From the general journal, we post it to the general ledger. And I've basically now done the general ledger with you. The only thing which I haven't written was folio and date. So please refer to your memo to see the ledger accounts. I'm not going to redo the ledger accounts, but what I am going to do now is to show you how to complete the general journal. Some important basics with the general journal. The account which is debited is always written first. Make sure that you get that right. So starting with what have we done first? Number one, we've taken the debtor's allowance and we've closed it off to sales, which means sales is debited, account credited, the debtor's allowances. And then our narration, we're just going to write this was a closing transfers. Then step number 2, sales was closed off to the trading account, which means sales is debited, account credited, the trading account. Again, narration, closing transfers. Step number 3, once we've done that, cost of sales is closed off to the trading account, which means that trading account is debited, cost of sales is credited. Now, step number 4, we can calculate what was the business gross profit. To calculate that while completing only our journals, we take the net sales minus the cost of sales. So please take note how to do it directly on the journal. Step number 5, close off all income to the profit and loss account. Reminder, when we did the T accounts, all income will be debited, account credited, profit and loss account. In my general journal, the accounts which are debited is written first. Take note how we group them together. To find out our total income, we are going to add all the income. That equals 173,500. Our next step, all expenses is closed off to the profit and loss account. All my expense account would have been credited, which means that account debited is the profit and loss account. So we start by just writing profit and loss, and then we list all our expenses which is going to be credited. We add that together to find out the total expenses. Once we've got our gross profit, all our income and all our expenses, we can now calculate the net profit. To calculate the net profit, take the gross profit plus income minus expenses. So this is how it will look in your journal. Account debited is always written first, which means that if I'm looking at my T accounts, account debited is the profit and loss account, account credited is going to be capital. With 36,471. Once we've taken the net profit to capital, We can do our last closing transfer, which means drawings is closed off to capital. The account which is debited is always written first, which means capital is going to be debited, account credited, drawings. And again, my narration is just a closing transfer. To complete now the last question, 1.4, the post-closing trial balance. My post-closing trial balance will have no nominal account section and it will have no drawings. Why? Because drawings is closed off to the capital account. So basically in this activity, the only change would have been the capital and there's no more drawings. Why with capital? We had a balance in the beginning, 795,400, but additional vehicle was contributed, which has been recorded. So that means we've got the balance in the beginning plus the additional capital contributed plus the net profit minus the drawings equals my new capital balance. So this was just a basic activity for you to have a better understanding. How does the closing transfers work? And to summarize this again, closing transfers happens after adjustments have been done at the end of the accounting period. This is done in your general journal. From the general journal, we take it to the general ledger. And from the general ledger, we compile now the post-closing trial balance. It is imperative that you understand the steps. How do we get in calculating our net profit? We start by looking at the trading activity, in other words, the trading account, by taking your sales, your net sales, minus your cost of sales equals the gross profit. I cannot calculate the net profit if I haven't calculated the gross profit first. So first calculate the gross profit, then add all your income, subtract all your expenses, then that equals the net profit, which is then taken to the capital, and then your drawings is taken to capital so that you can calculate your new balance. So that order is important to remember and to study. Thank you very much. In our next activity, we are going to look at closing transfers, but we're also going to look at some adjustments. Adjustments is new to grade 10 learners. The more you practice it, the better you're going to get at it. Have a wonderful day.